Lack of affordability and uncertainty surrounding interest rates remained issues for many would-be home buyers in the GTA in October of 2023. As a result, sales edged lower compared to last year. However, selling prices remained higher than last year's levels. Paul Baron, president of the Toronto Regional Real Estate Board, is here with us this morning to take a deeper dive. Good morning to you, Paul. Now, the average selling price both up on a year-over-year basis by 3%. What does that signal?
Well, it signals the resilience of the housing market in the GTA. Even though interest rates are so high and it's hard for affordability, there is still a massive demand for housing. And people are just waiting for that signal so that they can get back into this market.
Yeah, I know a lot of people are looking forward to that signal. And now, realtors reported 4,646 GTA home sales through TRREB's MLS system on October 2023, down 5.8% compared to October 2022. What dynamics are at play here?
Yeah, so there is no doubt that affordability is the key issue, and there is a lot more homes on the market. But if people can't make those mortgage payments, they're just going to have to sit on the sidelines, and that's the problem. Is they're sitting on the sidelines waiting for some indication that things are going to change.
Yeah, and new listings in October, they were up noticeably compared to the 12-year low reported in October 2022, but up more modestly compared to the 10-year average for October. What does that say to you?
Well, it says that there is a lot of people right now with mortgages coming up for renewal. They are trying to get their properties on the market, change their situation. So we're seeing a lot of properties come on. And without that massive number of sales happening, inventory is rising, which is really a great sign for buyers because obviously more inventory means more choice, and that's important for buyers.
Interesting. Those dynamics have to have some impact on the rental market as well. What's it doing for rentals? Yeah,
so the rental market obviously is what the majority of people are turning to with interest rates so high. And the rental market is very, very tight as well. And we're seeing a little bit actually uptake in inventory on the rental market, but it is getting snapped up fast. But again, rental rates are also extremely high as well, which just makes any type of home ownership, whether it's rental or purchase, very difficult for a lot of people.
Yeah, and speaking of that, and all those people sitting on the sidelines, mortgage rates are only expected to trend lower in the second half of 2024. Why is that taking so long?
Yeah, well, I think that the government of Canada is not looking to move things too fast. But, really the market reacts not just to where interest rates are, but where interest rates are heading. And I think that when we look at the stall in the summer or the spring of this year, we saw prices start to really react and go back up because people were anticipating that we are at the bottom of the cycle. And I think that we're getting back into that now. The job market is tightening a little bit, so I think that we'll see interest rates stable and start to go down in 2024, and that can only mean that people are going to jump back into the market with that anticipation of lower interest rates in the future.
So 2024 could be an interesting year. We'll continue to check in with you. Thank you so much for being with us. Paul Baron, president of the Toronto Regional Real Estate Board, this morning. Have a great day.
Thanks very much. Have a great day.